During the last fortnight, the lowest closing of Nifty was at 10,856 on 7th of August. This level of Nifty's support was shown in our previous episode of Economy and Markets. Also, Reserve Bank of India during the last fortnight reduced interest rate by 35 basis points. Possibility of this also was clearly mentioned in our previous episode of Economy and Markets. Welcome to Economy and Markets Fortnightly, first episode of August 2019. The US-China trade war remained the hot topic during this fortnight. The ongoing trade war is clearly showing its impact on the world economy. Consequent to US federal reduction of interest by 25 basis points, China allowed its currency yuan to weaken further and to touch the psychological level of 7 yuan per dollar and above for the first time in almost 11 years. Reacting to this move by China, the United States has designated China as a currency manipulator. The trade war is now converted in a full-blown currency war. The United States has postponed the planned additional tariffs on Chinese imports worth goods of 300 billion US dollars. However, this step is not seen any sign of relief in ongoing trade war between two major economic powers. The world economy is clearly facing the heat of this trade war, and Morgan Stanley has indicated global recession except in India within 3 quarters. As far as domestic economic growth is concerned, Reserve Bank of India in its last policy has reduced GDP forecast for financial year 2020 to 6.9% from previous level of 7%. Earlier in the month of June, RBI had reduced this forecast from 7.2% to 7%. There are signs of slowdown in various sectors, but particularly automobile sector is witnessing the severe slowdown in India. The sector is concurrently impacted by a number of negative factors like increased cost of production. New emission rules announced by government require heavy investment by sector. Liquidity and credit concerns of non-banking finance companies, which was the key source for retail car loans, is also impacting negatively. Competition from new global entrants in this sector. Tax benefits announced by government during the last budget on electric vehicles. Though a very positive move from pollution control point of view, it has put customer on hold as electric vehicles are yet to enter the market, and as per the industry sources, nation is not yet fully prepared as far as infrastructure required for electric vehicles is concerned, like battery suppliers and power charging stations. As per the press released by Society of Indian Automobile Manufacturers, sector is facing severe negative growth in all its segments, with overall decline of around 22% from April to July this year. This is the worst scenario as far as growth figures are concerned in last 2 decades. There are reports of layoffs from almost all the segments in the sector, be it auto manufacturers, automobile component manufacturers, or automobile dealers. Sector is seeking government sops for revival through various forms, including reduction in GST rate. Let us now look at the various economic indicators during last fortnight. Nifty closed 0.8% down at 11,029 after taking support at 10,856. The range which was discussed in our previous episode. Nifty is still not showing any sign of strength on charts. Nifty Midcap 50 on other hand closed lower by 1.92% at 4272. US dollar appreciated by huge 3.62% and closed at 71.24 rupees per dollar. As mentioned in our previous episode, dollar's weakness was up to rupees 69.20 on charts. Look at the charts of rupee and dollar. See how dollar has moved swiftly after breaking the resistance of 69.20. During the fortnight, there was a massive decline in Brent crude oil price, which fell by 8% due to economic slowdown. CPI and WPI stood lower at 3.1% and 1.08% respectively, giving some legroom to RBI for further interest rate reduction to handle economic slowdown. Thanks for watching.